Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about a specific asset. So, as we kind of talk about crypto a lot on this channel, it's a crypto-driven channel. We really kind of look at a few things, and that is, everyone is trying to find out what is going to be the next Bitcoin. What's going to be that asset that runs and does a massive ROI potential, return. And, Bitcoin for the longest time is one that everyone has been, really kind of addressing in terms of that because we know, going all the way back to the early days of Bitcoin, this thing has ran greatly. I mean, we're talking about going as far back as roughly 2013 on this chart. We're talking about $100 to $70,000. And today we're actually going to be addressing a token that I do believe will be seeing the same exact percentage runs that Bitcoin has seen. And, this is really going to be talking about the idea on like, are we going to be seeing a utility driven market? In my opinion, we will see a utility driven market. We will see regulations being ushered in. We are seeing institutional demand growing around crypto. I would say that the value perceived behind crypto is being noticed. I think that this market is far too big to ignore now. And when we look at things happening within this market, I would say it's really kind of centered around utility for right now currently. And the reason why I say it's centered around utility is that everyone's really kind of looking at what's going to happen, when regulations are being ushered in. Are there going to be, a set few assets still left over? Is it going to be like the dot-com boom, right, where there was a ton of, these massive projects, skyrocketing in value, which I see happening right now with a lot of meme coins. And then what's going to happen after the bubble bursts, right? Is there going to be a select few left over, similar to like Amazon and things like that? And I do see that actually happen. I see when we look at crypto, I think that this market will burst. I think that we will see a burst happen within this market, but I don't believe it's going to be like the dot-com, bubble. I think that when we look at crypto, right, we are going to be seeing a bubble bursting around, unregulated assets within the space because regulations are going to change the entire landscape for crypto. Now let's talk about that. So we see utility being ushered in. We're going to be seeing that that pivotal moment where crypto is being utilized on a day-to-day basis in legacy systems. Quant is one that I have been talking about for a while. In fact, my video from June 14th, 2021 really kind of spotlighted Quant in a different light. This was the first video that I really started talking about Quant. We were aware of QNT during, again, May all the way through June. I really started tweeting about Quant at around this point where it was like $36. It came down to test like $24. Perfect opportunity in terms of buying demand. Like we were buying this throughout this entire process. It was about roughly 115 days of accumulation. Now, after this, this did a massive run to $400+. Again, when we look at Quant, do I believe that, Quant's topping point is going to be $400? Absolutely not. If we kind of look at this chart and we kind of compare and contrast it to Bitcoin, it looks pretty similar in the sense on like, the early days. Yeah, you could have got this at 20 some cents. But now I think that those days are pretty much done with. I think that when we look at Quant, I kind of compare and contrast it to Bitcoin in the sense that when you look at Bitcoin, and you look at Quant has 33% less circulating supply, but also Quant has a ton of utility behind it that Bitcoin doesn't actually have. Now let's talk about this. So first off, the first major target for Quant would essentially be $1,000. It would be an 833% run, and we would be sitting at about roughly $13.4 billion. After that, it's $10,000, which is a 92x. We're sitting at about $134.1 billion, which is around the same, market cap of most assets that have done all-time highs in the top 10. Now, what if we had Bitcoin's market cap, right? So if we actually had Bitcoin's market cap, so let me actually get rid of this price, and let's go to, let me actually reset this, sorry. So let's go to Bitcoin. Let me refresh it because it's kind of messing up a little bit. So here we have Bitcoin's market cap. A 526x, we'd be sitting actually about 56.5k. We'd be worth more than Bitcoin at the current moment, because again, Quant has less supply. It's more scarce. That's not why I'm saying that Quant will be bigger than Bitcoin. I don't go off of just circulating supply. I actually go off of fundamentals with Quant. And we're going to be talking about those fundamentals here shortly, but this is something that is pretty interesting though, because when we look at this market, first off, let's go back to the dot-com bubble, right? What happened after was a little bit of, a recovery time base for, again, stocks. I think that, crypto will recover faster than what stocks actually did take in terms of time to recover. When we do see that, I foresee the top 10, possibly even the top 25 assets within crypto having a $1 trillion market cap. The reason why is because by 2030, I foresee this entire market being worth over $100 trillion. Because when regulations come into the space, it's going to be very similar to the stock market, where the stock market globally is worth $100 trillion right now currently. I foresee crypto being worth well more than stocks. The reason why is because of what crypto is actually doing. And we're going to be addressing why Quant is going to be so big. So first off, let's address this real quick. In terms of a $1 trillion market cap, I've addressed this before as well. We would be sitting at about roughly 70, almost 5K, an upside of 694x, which is pretty significant. Now, let's talk about why this is something that's possible. Now, as we talk about crypto on a day-to-day basis, there's one big key aspect to crypto that we are seeing banks really kind of looking into, and that is distributed ledger technology, DLT. We see here, and it says, unlock the true value of DLTs at a single stroke. Now, what Quant has built is the 3-line code, massive plug-and-play gateway to the DLT systems. Quant's Team Overledger DLT gateway has game-changing implications for the world of distributed ledgers. Why? Because it delivers interoperability across systems, networks, and DLTs securely, simply, and cost-effectively without the need for new infrastructure or introducing bottlenecks. By removing the barriers to interoperability, Overledger helps you create a whole new world of possibility. Again, this is that interconnectivity layer between, we're talking about the legacy banking infrastructure to the new digital infrastructure. And I think that this quote from Gilbert Verdian, who is the CEO of Quant, really kind of sums it up. We've solved DLT interoperability, thereby positioning us to re-architect our systems and create networks as connected as the world we live in to help drive tremendous value, open up new markets, and realize new efficiencies for enterprise, governments, and individuals alike. And if you guys have been, under a rock lately, it's okay. We have been seeing a huge spotlight being put on crypto from not only the government side of things, but also enterprises, financial institutions, and even just individuals themselves that are trying to re-architect their entire business model. When we look at things happening around Quant, we have seen them partner with Oracle lately. They also are partnered with SIA, which is interconnected with already 570 plus banks. So I would say they are at the forefront for this. And of course, they're continuing to build out this. Now, the funny thing is that you guys could take a look at all of their technology layers. They actually have a huge breakdown of all of their technology and their solutions. I'm not going to break down too much of their technology because I've already done so many videos on that. But I do want to talk to you guys about their solutions. So first off, we take a look at multi-ledger tokens, which we've taken a look at this before. In terms of stablecoins, I'm sure, again, if you're not sleeping under a rock or anything, you've probably noticed that stablecoins, right, have been also a forefront, focus point, especially in terms of DeFi. What that, MLT does in terms of Quant's Overledger, it actually allows for a mix of DLTs to basically be utilized in terms of minting tokens. We actually see here, who is this for? Central banks, fintechs, trading consortia, closed-loop payments, marketplaces, and micropayment platforms. How does it work? Funds are held in escrow with a financial institution, and tokens to the same value are issued, minted on a private DLT. These funds can be used on any DLT or mixture of DLTs, public or private, and Quant patent multi-ledger technology, or token technology, is applied. This ensures that wherever the tokens are used, changes of ownership are recorded on the original DLT and a clear auditable record is maintained. The nature of MLT means that the tokens are open and can be used on new and different DLTs as they emerge or as use cases grow. So this is going to be, again, interoperability on specific use cases between stablecoins on all DLTs. Now, you might be wondering, What are considered DLTs? If you guys are new, that's totally fine. DLTs are like Ripple technology in terms of the XRP ledger. Hedera has a perfect DLT for use cases around enterprise uses, but there's also other DLTs like XDC, XLM, etc. So a lot of those are basically DLT technologies. And again, there's end-to-end DLT access, cryptocurrency payments as well. This is going to be pretty big. And then, of course, there's the distributed ledger network. Now, this is going to be one network for all. This is going to interconnect all networks within the space, the Ethereum network, the Ripple network, the Bitcoin network, every network. So far, these are the only 3 that they have in terms of support. But again, this will continue to build out. We have actually been seeing a lot of build out technology within the space, more so focused on like Polygon, even Polkadot, and things like that. And then, of course, solutions for distributed ledger technologies, Overledger for Oracle. Overledger for Corda, which again, Corda is huge. We talked about that with Zinfin, Hyperledger Fabric, which is also centered around, even Hedera, Hyperledger Basu as well. So there's a lot of, already connections built within a lot of these networks that are the main players within crypto. This is very crucial, especially for the future of blockchain and also even digital assets. DLA Piper actually really kind of talked about this as well in terms of the growing new trends, achieving digital transformation and securing digital assets. Now, they did focus on distributed ledger technologies themselves. They also talk about NFTs in terms of tokenization of certain things like, even real estate and stuff like that. That's going to be pretty significant. But we also talk about, DLTs and DeFi from the Federal Reserve. Novel technology like distributed ledger and decentralized finance have the potential to improve efficiency of the payment system and encourage a more competitive financial landscape. Now, you might be wondering, well, why would they even utilize DLTs in crypto? Well, this is exactly why. Okay, as we do see more competition rising around the world by, again, utilizing technology like crypto, we have no choice but to adopt this technology. We actually see here Jerome Powell said at the Bank of International Settlements Innovation Summit on March 22nd, there are also potential financial stability concerns for some products. In particular, we don't know how some digital products will behave in times of market stress, which could lead to large destabilizing flows, nor do we know how stresses in crypto markets could potentially spill over into traditional finance systems. That is also why we do run a lot of stress tests. Quant is actually running stress tests here and there as well, and they've already proven, through stress tests and things like that, that their interoperability solution does work. We also see a lot of these DLTs actually utilizing stress tests. Now, in terms of crypto and the argument behind it that it's very volatile or it's not stable, we've actually learned that crypto is far less volatile than the US dollar. And you might be wondering, what are you even talking about? Well, we have assets like XRP, right, that could be settled in 3 to 5 seconds. Okay, in 3 to 5 seconds, the landscape of crypto can change drastically, but not too drastic. In 3 to 5 seconds, if something was settled, for example, here is a difference of 5 minutes. The price actually stayed stable during this 5-minute interval, which means that the price of crypto, certain cryptos, I should say, if they settle quick enough, were actually less volatile than the dollar, because the dollar settles in terms of the traditional system in 3 to 5 plus business days. Here's a 7-day view on XRP. This is volatile. You're talking about from the 19th, so it's been 4 days. This was sitting at almost 80 cents. Now it's sitting at almost 70 cents. So think about it like that. That's a 10-cent difference, but that is in a 5-day interval. So think about it like this. If I was to use something and it settles in 3 to 5 seconds, the value of that transaction is not going to change drastically. But if I transact it in the US dollar, say for so it was a $5 million payment, okay? And I was making that payment when the US dollar was at maybe the value of like 98, for an example. And I made that payment, and it takes 3 to 5 seconds for that actual, transaction to settle. In that 3 to 5 days, that value could actually decrease greatly or increase greatly. Now, you wouldn't be seeing that at the end point. The intermediary that is in the middle making that transaction possible, putting their trust in, again, the value behind that transaction, is the one that would technically either take that hit or see that volatile price change. Now, again, the same goes for digital assets. This is why digital assets, in my opinion, are so much far better than the traditional markets. And that's also a main argument behind a lot of digital asset adoption is it's so volatile. It's so volatile, but it's actually not, especially if you are talking about, payments or even cross-border payments, right? Now, also, I mind you, Quant is well positioned within this market with some high tier names. We actually see here in 4 days, Quant joins Global CBDC panel at FT's Digital Assets Summit with Gilbert Verdian of Quant, Timothy Lane of Bank of Canada, Charlotte Hogg of Visa Europe, Thomas Hardiono, I'm hoping that I'm saying that right, of MIT, and we're even talking about Financial Times here. But this is pretty significant when you look at the names that are tied to Quant and where they are actually, positioning themselves. Gilbert Verdian has an incredible resume behind him, and it really kind of shows you where Quant is positioned at currently, as we do see DLTs really taken over. And when we talk about things happening, even in terms of tokenization, tokenization will really not be anything if there is no interoperability between, tokenization networks that are going to tokenize assets and really kind of try to transact between different networks. That's why interoperability is such a key aspect for a lot of this market. And I share with you guys the overall platform schematic of this from Quant. So again, I know an argument point in the comments is going to be, well, how does QNT in terms of a token actually, gain value if it's not going to be utilizing QNT as the main power source behind all of this? Well, let me share you guys with this. So here is Overledger's operating system. This is going to connect everything. So we do see Overledger Network is a scalable P2P network with layer 2 payment channels, enterprise and institutional grade multi-chain oracles, connect any network to any network at scale without overhead or limits, treaty contracts, deploy, query, and execute multi-chain smart contracts, create applications that deploy and connect across multiple blockchains. And you do see the interconnectivity here between the traditional markets, which is like Web 2, Web 1, and then Web 3.0, which is like through payment APIs, blockchains, enterprise blockchains, banking APIs, IoT APIs, and all that stuff. It's all API connectivity. This is all through gateway APIs, by the way. 3-line code, plug and play, no change at all in terms of the infrastructure. It's just, really quick plug and play ease of, interoperability being solved through, again, the legacy systems and the digital systems. Now, when we look at this, right, how will QNT gain value if QNT is really not, powering this entire process? Well, that's where a lot of individuals kind of get confused, right? Because I've been seeing a lot of FUD behind Quant in my time of talking about it, where people say QNT is garbage, it's nothing but, just another fancy token to gain value off of speculation. Well, that's where everyone is wrong. QNT as a token is actually going to increase in value as the demand behind Overledger actually increases. And I actually have that diagram here. So it's a little bit zoomed in so that you guys can really kind of see it. Now, here's the QNT utility, right? QNT is going to be utilized for all these transactions, for every transaction that flows over the Overledger. Now, when I tell you guys that, think about it like this. Everyone's thinking small term right now because they're saying, well, that's not going to be a lot when, it still actually needs to build out this operating system, right? But think about it like this. It already has Oracle signed on, SIA chain, which is already 500 plus, 570 plus banking clients. And they're going after large grade amounts of capital. Now, just imagine, all right, all of these DLTs interconnected through one massive network where they need to utilize and hold QNT as a token, where it does have 33% less supply than Bitcoin. Think about the price demand behind QNT as a token at that point. Now, it's also used for identity and account. A minimum QNT holding amount is put in place for every participant of the Overledger ecosystem. The wallet storing QNT is your identity, the private key is your password, and with the license fee, you are assigned a BPI key. Excuse me. Now, when we look at this, right, every single account that is on the Overledger network is going to have to hold QNT. That significantly brings the supply of QNT, or free supply I should say, down. Not only is QNT utilized for that, but it's also utilized for all platform fees, a license fee. Now right now the license fee isn't, that much, but when we talk about the demand, as the demand grows, the price demand will also increase for a license fee. And it's in QNT and it will be payable by all users and developers. Then we do see developer license as well. Again, Everybody thinks that this is not flashy. It's not going to be enough. It's not going to, boast the QNT token price. That's where everyone is wrong. Okay, as this network continues to grow out and be needed, which is it's a necessity part, okay, of the future, markets for legacy systems as well as DOT systems in the banking system, in just the regular financial system itself for, cross-border payments and things like that. QNT, or I should say Quant, is going to grow massively in demand, similar to this schematic over here where we do see all of these massive names. Now, also, as we do see this, enterprise licenses. QNT tokens must be provided to Quant Network in exchange for an annual license. Price of the access will be fixed in fiat, and the number of tokens needed will vary depending on the price of QNT. Enterprise license fees will be determined on the basis of number of users, number of employees, application type, volume of transactions as well. That means, right, that the fee will actually be a massive fee if the volume of transactions, for say for so, we look at things like Swift doing $5 trillion a day in transactions, is massive. So when we talk about that, think about the amount of fees that will have to be payable in order to utilize this in terms of an enterprise license. Then we do see transaction processing, application users, gateways and staking, utility token investing and trading, and yes, there will be, staking coming to the Quant network. That's going to be something pretty significant. Now, all of this is going to drive the value of Quant, aka QNT as a token. And like I said, Quant has already solved interoperability. Quant is the leading name behind interoperability. They are going to be the interconnectivity behind the digital revolution of the financial system. This is why I do believe that Quant, maybe it's not going to happen overnight, because even Bitcoin, right? It took 1,700 days, almost exact, to get to $10,000 from $100. But in time, I foresee Quant being worth at least $10,000, which, mind you, is almost a 100x. Could take 1,700 days, could take a little longer. I foresee Quant having a massive potential ahead. Even at $50,000, right? A market cap of $670 billion, being the interconnectivity layer behind the legacy and digital systems, that's pretty undervalued. I actually see Quant holding a $1 trillion market cap value in the future. By 2030, I think that this entire market's going to be completely changed in terms of the landscape, and tokens like Quant are going to be at the forefront of it. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.